The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe with me, Steve Sedgwick, and Karen Cho, and these are your headlines. The criminal investigation into Fed Chair Jerome Powell sparked backlash in Washington, with every living predecessor in the position saying a statement saying the move has no place in the United States.
UBS boss Sergio Ermotti reportedly eyes the exit as a report that he plans to step down next year fires the starting gun on one of the most contentious succession races in European banking. Airbus maintains its place as the world's biggest plane maker, beating its revised delivery target after a bumper end to the year.
All right, happy Tuesday to everybody. Got to get it right, yeah. Look, the producers very kindly sometimes offer us a chance to say what we like at the top of the show to get it off our chest. I think they find it wise to let me just spout on, so then I do less later on. It doesn't work like that. But I actually didn't. I said to Mike, executive producer, I actually don't have anything new to say about the top story, which is Fed Powell. Apart from markets remain, I think the right word is nonchalant. They have zero concern at the moment that this is going to spiral into something more serious. And that means it's very binary, because if it does spiral into something more serious, the markets are going to have the mother of all shocks. Again, I'm not calling this. I'm saying if there were a sequence of events that then affected the bond market and that then affected the equity market, the market appears woefully underprepared for that at the moment. The scenario the market is going with is that there will be a benign solution to this Fed independence wrangle.
The reaction we saw was contained in certain asset classes. It was in the dollar, so you did see some movement there. It was also a little bit in yields, and it was in gold specifically, that old safety trade. But we have seen that around the geopolitics too, where investors trade in very narrow corridors in reaction to news events. The points I think to be raised here is that the reaction was very strong in some areas stateside. In Washington, there was pushback from some Republicans too about the consequences here, and in terms of other nominees too that the president may put forward to be on the board of the Federal Reserve. So there was some pushback. There was some pushback about the implications for the Justice Department itself around independence. So I think that you saw quite a strong reaction to this from quarters of DC, as well as certain parts of the market. But to your point, do we see any repricing around the yield curve? That's what the market will be looking for this year. I think the other point too is the consequence for interest rates. Do we see a more dovish tilt to the Fed? The reality is, even though we saw bickering last year, we still saw a reduction in interest rates from the US Federal Reserve. So rates still went lower in the direction that Trump has been demanding.
A couple of things just on asset classes, one on the bond market, one on safe havens. One, if this wrangle continues, is the longer end of the bond market going to react as, even if there is a more dovish tilt, if they are concerned about the inflation running too hot? The second point, you mentioned gold as a safe haven. I wonder what kind of safe haven you're going to get from precious metals at this level. Now, given the fact that, and I'll use silver for the example, because I didn't necessarily know if silver's a safe haven, but I just think it's the most nuts move that has happened over the last few months as well. In April last year, silver was trading at $29. The latest print on silver is $84.81. Maybe it was a safe haven a while ago. I don't know if it can be called that now. Well,
when it comes to the gold price, I did see a call for $5,200 by year end. So again, some are saying there's plenty more upside potential, but take the point that if you've got a safety trade here, that the market has turned into some sort of bullish trade. Does it pose risks if you see some weight coming out of the market? I mean, does gold go higher in those circumstances and hold its own? Yes, 5,200, 3,200, 4,200. I mean, it's just
putting the tail on the donkey with a blindfold, isn't it, at the moment, given where we've come from. But absolutely, gold is definitely looking very hot at the moment. Right, the criminal investigation into Fed Chair Jerome Powell has sparked a bipartisan pushback in Washington, D.C. Senate Republicans criticised the move, defending the central bank's autonomy against what some described as a political probe. North Carolina Republican Senator Tom Tillis said he would oppose any Trump appointees to the Fed until the legal matter is resolved. Fellow Senators Kevin Cramer and Lisa Murkowski have also sounded the alarm about the central bank's independence. Former Fed chairs Janet Yellen, Ben Bernanke and Alan Greenspan have joined policymakers from both parties to call for Fed autonomy, calling the investigation into Powell a, quote, unprecedented attempt to undermine the central bank's independence. Meanwhile, on the other side of the divide, House Speaker Mike Johnson said he intended to let the probe play out and not jump to any conclusions. President Trump has denied any knowledge of the DOJ's investigation. National Economic Council Director Kevin Hassett told our US colleagues that Trump has several issues with the Fed.
I think the president has been very vocal about what he thinks about interest rates. I don't think that there's any mystery about that. That he's frustrated that there were big cuts right before the election. He's frustrated that when he came in 2017 that there were big hikes before he's inaugurated. And so he has lots of frustration with what he views as the partisanship of the Fed. But this right here is a legal matter.
Absolutely fascinating on many fronts. In fact, some Republicans are saying they don't like Powell. They don't think he's done the right job over at the central bank, but they don't doubt that he's not criminal. And that's a line that I'm continually hearing, actually, from the Republican side. They don't like him. They don't think he's very good at his job, but they don't think he's a criminal. Meanwhile, BlackRock's fixed income CIO Rick Rieder, who is amongst the top picks to replace Powell as Fed chair, said he wants to cut interest rates to 3%. In an interview with our US colleagues, Rieder said that was, quote, closer to an equilibrium in a Labour problem. But he declined to comment on rumours that President Trump was interviewing him this week for the position.
I think that anybody who's in that seat, that is an independent seat. That is a seat that you report to, I would argue, to your constituents, which is the country. And so I wouldn't comment. Whoever is in the role is going to make the right decisions. It's going to make the decisions that is the right thing for maximum employment and price stability.
While this story was playing out around the independence of the central bank, markets still climbing to fresh records. We saw it on the Dow and the S&P 500 again yesterday. The Dow now the fourth record close so far this year, and we saw on the S&P 500 the third record close so far for 2026. The Nasdaq not too far off its peak, about 1% off that metric. So you can see green splashing up right across the board. What we've got across the Asian markets, fresh all-time highs also being inked. The Japanese market back from a holiday, and you can see escalating up more than 3% fresh highs there. The South Korean market, Taiwan also at new peaks. So some of the gains very much spinning across to that Asian region as well. The Shanghai market left behind down 0.7%. Well, European futures as we get going. The German stock market, a new intraday all-time high. And we've got the French market, similar territory. So this side of the world, we've seen some high levels too for 2026. The session this morning, we look muted out of the UK market, where we're seeing, again, a little bit of green spilling onto the boards for the Xetra DAX and for the Italian stock market, suggesting more upside as we reach for further territory to the upside. Well, US futures, the early indications stateside around sentiment, again, look a little bit weak, but we've seen that throughout the course of this week. Pre-markets have been a little bit lackluster, but certainly the buying came back into the mix in session yesterday.
Ben Emmons is CIO and founder of Fed Watch Advisors. Ben, always great to see you. Thank you for joining us at a crazy hour out of New York as well. Ben, we have so many questions for you. As Karen was pointing out on the market run there is only one asset class that is flashing red at the moment, and that is the voracious desire for gold from global investors, or certainly from the retail side at least. Do you think that markets are too relaxed, too nonchalant about the risks associated with the Federal Reserve's independence?
Could be, Steve, and good morning, because if you look at the 10-year yield right where it is right now, it seems to be sort of hanging just below 4.2% and doesn't seem to be able to go higher than that. And people have taken stock of that, saying, okay, well, this bond market is quite calm about it, and it doesn't seem to matter too much. The meeting for this month, the FOMC meeting, will probably be on hold, and that's priced in. So nothing's going to change to this picture, even if Powell were to step down right now as a result of this probe, this investigation. But if you look further out, in bond markets, we don't only look at spot rates, what we call forward rates, as in something you discount in the future. You can clearly see a change. The 10-year yield, say the next 5 years and 10 years, is sort of anywhere from 5.25 up to 5.75. And has been consistently at that level, pricing, I think, a future risk premium for this potential independence loss, which really I think the market cares about the timing of policy in that vein, meaning you're going to get rate cuts at the wrong time and too quickly at the wrong time, and that could then spark inflation. And that's what the bond market is pricing in, with some risk premium in the future. So I don't think that the market is unaware of that this could be an issue. But you're right about what's happening right now. There's nothing going on other than just watching the data. We're going to get inflation tomorrow. That's more on the trader's mind than the immediate loss of the central bank's independence.
That's fascinating and educational as well, Ben, that actually the futures markets on the 10-year paper and further down the curve are actually pricing in this risk as well. So that's very, very interesting as well. Just one more question on this then, if I may. With those futures prices on 10 to 30-year paper flashing, well, let's say amber rather than red as well, do you expect that potentially to have an effect on the spot prices, the actual 10-year yield itself at some stage?
Yeah, that could be, because that's not only the theory, but that could be the case that you're getting a combination of things, Steve. You get an economy that does firm up quite a bit, like we're seeing GDP moving over 5% on the real-time GDP now. We're getting a lot of investment coming into the United States, perhaps starting really this year, which is all these commitments, plus all the investment coming from AI, from all the spending last year, turning into investment. So an economy that's well above potential against the picture of we're having a Federal Reserve that's going to move with rates significantly lower, perhaps lower than the neutral rate, lower than this 3% that Rick is talking about, but that's the equilibrium rate. And that causes that tension in these forward rates. And I think that is part of the combination of loss of independence against a potential risk of overheating of the economy at some point in time. And that could spark then that inflation risk. So I think this is where we're sitting currently here. We can't do anything at this moment here right now, but it's something to consider about in the future. And I do think that we're not sitting only hedging with gold, which is sort of, I think, a hedge to, I guess, anything exogenous coming from this situation. But the people won't pay attention again to the bond portfolio and saying, I don't really want to own too many long-term bonds because of this potential risk in the future of an overheated economy against a central bank that is losing its independence.
Right. Ben, fascinating points there around the status quo where we are on the bond market and how tenuous it is. Let me ask you about what comes next, because one of the scenarios you're talking about is whether Powell could step down sooner if his position becomes untenable. Just explain that to us, because what we saw yesterday when Powell hit back in a public broadcast, he looked more defiant than ever before. One view for the market was that, look, he could stay on even beyond his tenure now. If he steps down as the head of the chair position, he could stay on still at the Federal Reserve.
And that's true because, if there's these senators, the GOP senators in particular, are expressing this concern and saying there's not going to be any nomination hearing, then yes, Powell has to stay on longer beyond this term potentially. But there's this situation that this becomes untenable, right? We're getting the investigation, there's more news coming out of it, and the way the mechanics work of getting a grand jury, right, which when then the indictment actually happens. Well, that could potentially become a real risk for Powell as in politically, where he's sitting and saying, I can't really sustain my position, and then I have to make a choice here for the sake of the stability of the institution itself, stepping down sooner. And we have seen Fed members doing this before during the pandemic period, when we saw Vice Chair Rich Clara doing that, and Robert Kaplan as well, because of different reasons, but also more legally issued reasons. So I think this is a possibility that's ahead of us, Alan, where we may be seeing Powell ultimately deciding that it's probably best for me to move on, especially when we're getting this new Fed chair announced, which the betting markets are thinking that it's sometime between January 22nd and February 1st. At least there's very high odds trading there. Then you're getting a very different situation. So I do think to conclude that Powell may step down soon if this becomes untenable, and then the next Fed chair becomes really the new chair really quick, and that will change things. So to be seen.
Yeah, Ben, in the meantime, the challenge may come through from the data, and we're waiting it out for CPI later on today, where some of the distortions that impacted the November inflation report to the downside may start to peter out, which means we could get some sort of snapback because of the compilation of this data. What do you make of the implications now for goods and services, which may start to show some heat in that inflation print?
I think that's an excellent point. I mean, it's been going on over several months that we went out of goods deflation into mild inflation, and then that picks up further. I mean, that sector is really affected by durable goods, by investment, tangible things, which also expressed out in the commodities markets that you were talking about, like the higher gold prices, silver prices, other base metals, because they're all inputs to the industrial expansion that we're going through currently. So higher goods inflation is there, and I think this is where the market is right now. It's not doing anything to see data like that to move, say, above 4.2% on the 10-year as one example, and that's on the mind. I think is supposed to be the loss of independence until Powell makes his move, and that's just say like it's time for me to move on.
Ben, whilst we're all looking at extraordinary events in Washington, one event in Washington we haven't even mentioned today, and we're going to do a little bit of this with Dan later on, but I wonder what your thoughts were. Trump announces 25% tariff on countries doing business with Iran following protest crackdown. I'm pretty sure that countries doing business with Iran includes China and India. This could be another really big shot in the bow of that trans-Pacific rivalry as well, depending on whether it includes China, depending on whether China reacts. Again, another thing the market's ignoring. I wonder what your thoughts were.
Yeah, that's interesting, Steve, because, in a, like saying sort of like blanket ideas that this is just another tariff of 25% on all the consumer goods that are coming into the United States from China. If you link it directly to China buying from Iran, which is predominantly oil, but then, China does buy some oil from that, and there's a lot of analysis on how they actually smuggle that oil out of Iran, because it's all very tightly sanctioned and secretive in a way. So it's to be seen how much this really affects the economic relationship between China and the US, particularly when it comes to trade. But it's once again another tension to this, that as we're going into the Supreme Court decision, which may happen again on Wednesday, right, tomorrow, where they may rule on these tariffs, Trump has made a move again on these tariffs as in a tool to affect expectations in the marketplace, that if the tariff does come in effect, markets will price in somewhat of this too. Again, this could have some impact on imported prices in the United States, as China has to accept this levy for doing business with Iran, which they may continue to do irrespective.
Ben, thank you so much for joining us. An absolute star so early in the morning. Steve's reminding me it's 2 a.m.?
2:18 a.m.
2:18 a.m. Out of New York. Ben, thank you very much for the time today. Ben Eamons with us, CEO and founder, FedWatch Advisors. And just a reminder, CNBC is returning to Davos, Switzerland for the World Economic Forum's annual meeting, where we'll hear from top CEOs and policymakers shaping the global economy. Don't miss that coverage across CNBC starting on Tuesday. And ahead on the show, Europe and the United States are ready further measures against Iran following the regime's response to recent protests. Dan will bring us the latest. Plus, Airbus managed a slight beat on its already reduced full-year deliveries target, but is it enough to inspire investors? And talks between Marco Rubio and Denmark are underway in Washington. But what's the US really after in Greenland? We chat to Laura Taylor Kale, the former US Assistant Secretary of Defense, who led the department's first attempt to shore up critical minerals. That's at 9:30 a.m. GMT.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
A look at Japan, which may be heading for another election. Local news agencies have reported that Prime Minister Sano Takaichi plans to dissolve the lower house of parliament at the start of its regular session. Parliament returns on the 23rd of January, with a snap election expected to take place as soon as early February. Already the market again talking about a Takaichi trade if you get more fiscal stimulus. The EU's top diplomat Kaja Kallas has told Politico she is preparing to propose further sanctions against Iran in response to what she calls the regime's brutal repression of protesters. The President of the European Parliament, Roberta Metsola, also announced Iranian diplomats will be banned from entering parliamentary buildings in Brussels and Strasbourg. US President Donald Trump says any country doing business with Iran will face a 25% tariff on any and all trade with Washington amid Tehran's deadly crackdown on protests. In a post on Truth Social, the US president said the new levy is effective immediately, calling it final and conclusive. Well, let's get out to Dan for more. Dan, Iran is facing now more economic pressure thanks to the sanctions. Just weigh on what that means given the domestic situation and continual concerns that you may see further action from Trump on a military side.
Indeed, Karen, and to add context to your last guest, which was a really fascinating deep dive into the impact of these tariffs, this new 25% tariff is, of course, on top of the existing tariffs that the president already has in place. So it means that this could hurt some of Iran's biggest trading partners, including China, which maintains key commercial and energy ties with the Islamic Republic. Remember, Iran produces about 3.4 million barrels per day of oil, and about half of that is exported to China, according to Kepler. So we are already seeing analysts now bake in a scenario where Chinese goods could hit a 45% total tariff rate in the United States. But of course, the full extent of the impact is still really unclear at this point. Now, as you would expect, the Chinese have come out swinging. A spokesperson for the Chinese embassy in the US hit back almost straight away, saying coercion and pressure cannot solve problems. What's also interesting is that it's not just China, it's the UAE and specifically Dubai also at risk here. The UAE serves as a primary re-export hub for goods entering Iran. It's also a major logistics hub. And India is also on that list as well. It too has strong ties in Iranian energy and infrastructure. The president's post said that these new tariff measures would be effective immediately, but the technical implementation and, of course, the legal authority as well, still very much a grey area. So we're waiting for more details on exactly what this is going to mean. However, I did speak with the US Undersecretary for Economic Affairs, Jacob Hellberg, on Access Middle East this morning. He offered a window into how the Trump administration is currently thinking about this, and he says the president is now keeping all options on the table. Listen.
The Iranian regime has neglected its economy, its agriculture, its water, and its electricity in order to squander Iran's vast wealth on terrorist proxies and nuclear weapons research, all the while denying the Iranian people their basic rights. They want and deserve a better life. Ultimately, their future is in the Iranian people's hands. The United States, as President Trump has made clear, will not tolerate massacres in the streets. And ultimately, we're monitoring the situation in Iran very closely and have yet to deliberate on how we're going to respond to events as they unfold in real time.
Jacob Hellberg there telling me that the US is still deliberating and, of course, also underscoring that President Trump will not tolerate massacres in the street. So it's understood the president is going to be receiving another briefing today on the situation as he weighs this range of options. Of course, they include perhaps more economic pressure to, of course, the worst case scenario, which would be full military action as well. Interestingly, Trump also saying here that Iran's leaders have reached out saying they want to negotiate, even as he also warns that US military action could still come first as well. So it appears that the messaging inside Iran is that they are on a war footing now, but would also like to negotiate. And of course, all eyes now on exactly what the US president decides to do next. Guys?
Dan, absolutely fascinating. Iran is a deeply complex, as indeed the broader Persia, a deeply complex society as well. And it's wrong for us to look on it from the outside and say every Iranian is in favour of the current regime or against the current regime. So you've got two parallel governments, as far as I can see. You've got the supreme leader and the theocrats who run this, Ali Khamenei. And then you've got the government as well. And the president has already said, look, we the Iranian president, we have an economic problem. This is where the root of these troubles is as well. When the US president says the Iranians have reached out, I presume he means the latter rather than the theocrats who are in charge there as well. And that's really interesting for all of us looking in as well. Is there now developing a divide between the government and indeed the likes of the supreme leader, Ali Khamenei, who has effectively ruled the country for a long, long time?
Well, you do get the sense that they are singing from the same song sheet here, Steve. But of course, in Iran, there are multiple layers of authority here. It's not just Ali Khamenei at the top, but also Mahmoud Pezeshkian, who is, of course, president of the country. And then at the same time as well, you have the IRGC command as well, which of course exudes significant influence as well. So it is more than just one central figurehead in charge of the country. And at the same time, what we have also seen is a lot of the communication actually taking place through intermediaries and channels emanating from the Iranian foreign ministry as well. Now, of course, exactly what type of communication has taken place between US officials and Iranian officials over the last couple of days and last couple of hours is unclear to us, but it would appear that those lines of communication are open. Inside Iran, though, of course, one of the primary challenges has been this decentralized issue of command. And as a result, that is partly why we've seen these economic conditions continue to deteriorate. You get the sense that there is not one single person in charge. Again, part of the problem, Steve.
Brilliant work. Thank you very much indeed for that. And I've no doubt this will be another one of the key topics you'll be covering at the World Economic Forum next week, Dan. Let's have a look at the European equity futures as we go to break. Again, very little fare for those looking for a bit of direction. We do have the DAX and the CAC mildly in positive territory as we speak.